Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 8th, 2026, and we're diving into RPM's fiscal 2026 second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. RPM, a leader in specialty coatings, sealants, and building materials, has just released their second quarter results. Let's break down the numbers and see what they mean for investors.
Revenue and profitability overview. Let's start with the top line. RPM reported record second quarter sales of $1.91 billion, a 3.5% increase from last year. However, their adjusted EPS came in at $1.20, which is a 13.7% decrease year over year. John, can you explain the dynamics here?
Absolutely. While RPM achieved record sales, driven by acquisitions and high-performance building solutions, the adjusted EPS decline is notable. This was primarily due to lower adjusted EBIT, which fell by 11.2% compared to the prior year. The company faced challenges such as longer lead times on construction projects and temporary margin headwinds from plant and warehouse consolidations.
Segment performance. John, let's delve into the segment performance. How did RPM's different segments fare this quarter?
The Construction Products Group reported sales of $737.4 million, driven by roofing solutions, though offset by weaker disaster restoration sales. The Performance Coatings Group saw sales of $533.8 million, with broad-based growth and contributions from acquisitions. Lastly, the Consumer Group achieved $638.7 million in sales, bolstered by acquisitions and pricing strategies to counter inflation.
It seems like acquisitions played a significant role across the board.
Indeed, acquisitions were a key growth driver, contributing to the overall sales increase despite some organic declines and market challenges.
Operational efficiencies and future outlook. RPM has announced SG&A-focused optimization actions expected to generate $100 million in annual savings. How does this fit into their future outlook?
These optimization actions are crucial as RPM navigates a slower demand environment. The company expects to realize $5 million in savings in Q3 and an additional $20 million in Q4. Looking ahead, RPM anticipates mid-single-digit sales growth in Q3 and low to high single-digit EBIT growth in Q4. CEO Frank C. Sullivan emphasized the importance of focused growth investments in high-potential opportunities.
It sounds like RPM is taking proactive steps to manage costs while still investing in growth.
Exactly. By optimizing SG&A expenses, RPM aims to improve margins and maintain a solid growth trajectory despite current market challenges.
Market reaction and analyst expectations. Analysts had forecasted an EPS of 142, but RPM's actual adjusted EPS. How has the market reacted to this miss?
The market reaction has been mixed. While RPM's sales growth is commendable, the EPS miss has put some pressure on the share price. Investors are concerned about the company's ability to leverage growth investments effectively amidst ongoing challenges.
Do you think this will affect RPM's stock in the short term?
In the short term, the stock might face some volatility. However, RPM's strategic initiatives and cost optimization efforts could provide a positive outlook in the longer term.